Hello, Warriors. Here's a question of the day. Will US dollar yen challenge the 158 level recent highs going into the BOJ? What do you think? Hi, Steve, Mike, AJ, Bran, Andrew, how are you? Glenn, hi, Ryan, Ingmar, Hugo. So, what do you guys think? Let's look at it. Hello, team.
Morning, Dale.
Hey, how are you, Ryan?
Oh, good. How's your weekend?
Hey, Blake. All right. So let's start off with this. So we had that bounce Friday, Ryan, and getting some follow through. My rationale is on both the 4 hour, as you can see here, and even the daily at the highs, we have confirmed highs. We got some nice action off this black line. You still short, or you out?
No, I'm holding my short. I've got my stop well in the money, so I'm happy to sit on it and see if I can ride it into the Fed, see what happens there.
Yeah, it looks like 56. This wedge line that it got back underneath is the next challenge for it. So I was just thinking that the market is going to put the BOJ to the test by trading up into this range into the 19th, either before or during, to maybe force the BOJ's hand to raise rates, unless you already think that's baked into price.
I think it's baked in that they're going to hike.
Okay.
It would be a bit of a shock if they didn't, and then you'll probably get your 158. But if they don't hike December, they'll probably hike January.
All right. Well, this low looks important to me
Yeah.
from Friday. So, if we break down, I'm out under this. I'm like you, already took some partials. Not a lot, 38 pips, but we'll see. When we move to Euro. So Euro, I thought the 150 level would be important. Doesn't seem to be the 116.50 level doesn't seem to be that important. Keeps trading on both sides of it. Where are you at on this one?
Unfortunately, nowhere. It's asleep. We had a 50 pip range last week.
Yeah.
So this one's not in a rush to go anywhere.
Okay. And cable, is this a high? Should we be getting short cable?
No, I think you've got to look 133 or 134 and a bit like your 50 level in the middle. It's a bit of a pivot. We're holding below it today. Can't seem to hold moves above it. So I think it's range trading. We got a few BOE speakers this week, BOE next week. But interesting on the Euro Sterling you were just on. It's had a bounce, that 87.20 level.
Yeah.
I'll keep banging on about that held, but the bounce is looking fairly weak. We can't get above those prior highs, prior lows. Break point around this 40-50 area, so it keeps the bearish pressure on, in my opinion.
Okay. All right. So I think we've covered currencies. This surprised me. The weakness in Canada. I thought on the pullback we'd hold around this area. Looks pretty damaged. I don't know. Maybe there's some fib levels or something.
We've gone through the 50 in that one, so we've got the 61.8 coming up at 137.70, which is a bit of a level all on its own. But your black line there, which was the triple bottom and prior tops, that's going to be the one for me. But the wheels have come off this one. It's had a nice constructive rally. Played very nicely on the going up after we hit those bottoms over the summer. And as I say, the wheels are coming off pretty quickly. It's a bit of a mix of dollar weakness that we've been seeing and Canadian dollar strength, because they've had a good jobs report. The data's not been too bad. We're actually pricing hikes for this one next year, which I think is a bit of an overreaction.
Okay.
So it's possible, I think, Wednesday, the Bank of Canada might do a bit of a pushback against that hawkish expectation.
Okay. And USDMX, daily's diverging above 30, but I don't know if the 4 hour, no, the 4 hour confirmed. Uh,
This
Still
could
lower.
be trying to confirm a break.
Yeah. Yeah.
Yeah, it hasn't had the explosiveness I thought it might do.
Yeah.
But if you zoom out a bit and take that low that we got earlier a couple of months ago, September or whatever, yeah, probably a daily. Yeah, so take
Right
that
here.
low, yeah, and a line across there. We're just bumping our head on that at the moment.
Okay. Well, I hope it has a helmet on. We don't want the Canadian dollar to have to go through concussion protocol like they do, like they do.
Well, that's the other
Like,
thing with the Canadian dollar as well. Trump started up the USMCA chatter, so you've got to look at both Canada and Mexico at the moment for these two for what's going on. And yeah, I'm still long a bit on a short term trade. I'd like to see it. I thought it was going to be all right closing Friday above the line, but it's back below, and that 17.15 level has shown up for some reason. 3 goes at that. So yeah, bit of a coin toss from here.
okay. S&P is still not doing anything wrong. Um, uh, new highs for the move going into Christmas. Look, it looks like a layup. It's about
Yeah,
40 handles away.
yeah. I
Unless
can see this one being the market's expecting the Fed to cut and then sound a bit undovish.
hawkish. Yeah,
Well, I'm having this argument with people in the room about what's hawkish and not
yeah,
hawkish. Undovish. So that could bring
Hawkish
a bit of a
cut, baby. Hawkish cut.
hawkish cut. A bit of a dip in the S&P, probably get hoovered up, and then you'll probably get your new highs after. But we've got to remember with this FOMC, we're getting a ton of up-to-date data the week after. So whatever they do here this week, it could flip 180 or go the same way as whatever the market's doing next week, because we get NFP and all sorts. So we get caught up with the data next week. So it's going to be a big week as well.
yeah. It's also the solstice right around the BOJ meeting, and GAN was a
Yeah.
big one for the change of seasons. Could be a change of direction in markets. So that's towards the end of next week. So
And it
we'll
starts
see.
getting lighter.
Yeah. Yeah. So any vibe on WTI? I've tried to be patient with it. Looked like we were going to have some kind of breakout. We haven't.
Yeah.
So nat gas. Remember back here, I said it's not the widow maker; it'll be the widower maker. Well, I think that we can officially rename nat gas to the widower maker, because though all the wives had a heart attack that their husbands made this kind of money being long nat gas. So it's not a widow maker anymore. We have a lot of widowers out there looking for dates. So anyway, I think this was big last week, and we're getting followed through. A breakdown in TLT. It's going to be down another 50. 10-year looks doesn't look bearish to me. Looks constructive, like it wants to head higher, which is kind of ironic with a Fed cut coming. Although our guest today, Peter Bookvar, makes a great point about every central bank has been easing, and all their long duration paper are pressing new highs in yields. So it's possible that the central banks have lost control of that. I'm going to ask them. Go ahead.
I was going to say, Dale, that's the thing. If in our chat room, I think I put up charts of yields from Italy to Japan to the
Everywhere.
US to UK, everywhere globally, and
Yeah.
they're all even India is ripping.
Huh.
So
Yeah.
if you just take a look at across the globe, yields are flying, not just
Yeah.
in the U.S. So, and I think the common misconception is, all right, well, U.S. yields are rallying, so I'm going to buy the dollar here, but this is a global issue, and I know I talked a long time about it on the week ahead video about global yields rallying, and I spent like the first 5 minutes of the 40-minute video discussing it, but they are all gapping higher again today. So
Yeah.
Yeah, I
So,
don't, I don't think it's that central banks have lost control. It's the state of the world at the moment. Everyone's doing fiscal stuff. Everyone's easing. Countries are ramping up fiscal things. You got Trump's beautiful bill and all that sort of stuff. You got whatever's going on defence spending in Europe. Well, the UK is just a mess, but everyone's ramping up fiscal spending, and debt isn't getting any less, and that's one thing that causes
so
yields to rally.
yeah. So it's really just a supply issue, and then the demand issue with, especially if the yen puts in a top, or has already topped, is repatriation, to support their own markets. They're not going
Yeah.
to be coming in to support U.S. markets. I don't think Japanese money will. They finally have a yield to, get something. They haven't for 20 years.
No,
So,
that's right. But they're the second, third highest, maybe even first now, highest holders of US Treasuries.
yeah, so maybe they'll even have to liquidate them if they
Yeah, but that
repatriate, right?
that's one thing that we're watching for is if Japanese yields move higher, will all the big whales,
Yeah,
diversify away from the US and go back into domestic, and then you're potentially going to see a big old move into the yen.
okay. Well, I think that's, we're getting close to that story. I think we resolve this yen situation by the end of the year, early next year. So we certainly at least have a level that's going to tell you that something is changing. Take a screenshot, face. Okay, I think that's going to be a pretty important signal. At least it's telling you that there's something going on that's changing if we take out this breakout level. Um, okay, so where do you guys want to go? I don't think K-Man's here today, right? He's away.
Yep, he's away this week.
Oh,
So
okay, all
Greg will be
right,
coming in later in the week.
okay. So, Blake, what's top of mind for you coming into
well,
this week? Bitcoin's holding. Still looks like it's a flag, but maybe it has some more upside left here.
yeah, I'll pull up Bitcoin here.
All
I'll
right.
kind of show you what I'm looking at. As far as risk appetite goes, it's really
Yeah.
surprising to me. Well, it shouldn't be really surprising to me that risk appetite is strong. I still look at Bitcoin as a bear flag pattern, but obviously this $94,000 level is a pretty big level. More importantly, I think is going to be around the 100,000, just around 99,000. Which,
Yeah.
if you think about like this chart, it is realistic to believe that that we could make it up here, to 100,000 before falling again, and I don't rule that out, especially as we go into year end, depending on what happens with not only the Fed, but with data. I think what we need to see as far as data goes this next week, which Ryan pointed out, we're going to get past the Fed, and then once we get past the Fed, there is going to be the jobs report. We're going to have CPI. There's a big there's a lot of data actually coming out as we continue to play catch up from the government shutdown. So I think that if the data comes in weaker than expected, it's going to give us some dollar weakness. But B, I think that the market's actually going to like it because depending on what the Fed does this week, as Ryan said, it's going to be a cut, but it's going to be a hawkish cut, right, Ryan? Hawkish.
Nope. Undovish.
I know that's a bit of a bugaboo for Ryan.
So we find that out during the presser, right?
Yeah, no, well, not necessarily. Because we're going to get dot plots, and the dot plots are probably going to give us a pretty good indication on how the majority of the voting Fed governors are feeling, and the Fed governors just in general are feeling about hikes and cuts. So I mean, if the dot plot is suggesting that we might get, or everybody might be a little bit more dovish going into the beginning of the year, and then we get confirmation during the press conference. Maybe Powell says, hey, we still need to see the data from December, or the data from as we're playing catch up, and before we make a decision. If he leaves that door open for the beginning of the year, I think the market would really like that. And Powell's really good at not rocking the boat. He's really good at walking the tightrope. He's really good at not, sending the market into a tizzy. And we are, I mean, this is the last meeting of the year. We're at year end, and it seems to me that equities, as long as Powell and the FOMC don't rock the boat, we're going to see 7,000 in the S&P. It just seems like we're going to see new highs. And remember, we're going to be up at major channel resistance. If we do trade at 7,000, we're going to be right up at channel resistance, and maybe even a little bit higher than that. So, the market, if we do get like a hawkish cut, which again, Ryan hates when anybody says that. But if you guys don't know what that looks like and ramifications of what that looks like, all you have to do is take a look at the Kiwi dollar from, was it last week, Ryan? Was it last week? Yeah, what the RBNZ? No, it was a week and a half ago, right? Where we got a cut, and they were hawkish. They basically signaled that they're not cutting anymore, and the Kiwi went on a scramble, and we started spiking higher. We're right into the 38% retracement. So if you want to see what could potentially happen with a central bank that is not as dovish as the market expects, you could actually see a squeeze in the dollar. But I don't know if I'm expecting that. I mean, Ryan, what are you thinking with the Fed? I mean, do you think the Fed's going to leave the door open too wide, too ajar?
Yeah, they're going to leave the door open. Why? There's nothing in the data that suggests they should say we're going to cut this week and then that's it for the foreseeable future. Because they don't know the data that we're getting the week after. What if they say that? What if they say, okay, we're on hold now, and next week we get a minus 300k NFP, and unemployment's 4.8%. Market's going to have a paddy. Throw its toys right out of the pram and make Powell look stupid. So they've, as you said, Powell walks a middle line. He's not going to close the door on cuts. Yes, you could say we're going to wait for more data. We're going to wait to see the next round. We don't have to do anything till the next meeting, and so on and so forth. But there's no way he's going to say this is it. We're doing a cut and that's the end of it. So right. All this talk about getting hawkish is a hawkish cut, I think is wrong in my opinion.
Right. So therefore it is going to be really tough in with what you just said. It's going to be really tough for the dollar to muster up a rally going into year end. That's the conclusion I come to at this point in time, because I agree. For the Fed to say, nope, that's it. We're not, this is about as loose as it's going to get. That would be silly, because they would look stupid if the data.
That doesn't mean that we can't see a dollar rally. You look at the euro dollar chart for the year. Okay, it's done nothing but go up all year. So dollar's weakened all year. And is anyone going to say, oh, we're going to go all the way back down to 102, 104? No, but you could see people for year end closing up the books, booking profits, getting those nice end of year reports written out, X amount of percentage profits and everything. So I can see a bit of a dollar rally into the end of the year. Can't rule it out, but it's probably not going to be on the back of whatever Powell says. It's going to be just natural year-end stuff.
Is he going to tell the markets why he's cutting? Because he thinks inflation is tame and he's worried about the job market.
Yeah.
What is his rationale for cutting?
There's enough. There's probably enough They've seen enough weakness why they can go another 25 pips. Take it slow and steady, but do another 25 pips. The end game, when rates were up at 5.5%, the end game was to get rates down to neutral. It always has been. You can never ever forget that. No matter what the data's done, what Trump's done, the end game for the Fed is not to have rates above 3.5%. Okay, right. In any way, shape, or form. So yeah, that's still the end game. How quickly they get there is the question, and when they can get there is the question. But that's always been what they've wanted to do, and this is just another one where they can cut and get it. You know, the jobs market has been softer still. We haven't seen a meaningful pickup. They're a bit worried about the shutdown and the impact. You know, the administration saying that it might be worse than expected. So, you know, what does a 25 pip cut do? It eases a bit of borrowing, eases consumers over Christmas, over the holidays. You know, it's a bit of a pick-me-up.
Okay.
By the way, Hassett's on CNBC right now saying that, you know, Trump has a lot of good choices on the Fed chair, but he did throw in that, but he's going to choose me. That's what he meant to say. You know, he also is mentioning that the bond market's fluctuating in parts of probably a little bit of hesitation on his Fed chair pick. Which, by the way, if in case you guys missed it, you know, again, if you go over to this is the general chat room, from today, you can see like what's happening in yields. I mean, this is like here I put them all up here, Dale, so you can see them. Yeah. This is the European 10-year. This is Japan, right? That's the one. That was our feature chart for the week ahead video. There's Canadian 10-year yields ripping. Obviously, this is after the Friday jobs report, but you can see it continuing. This is UK yields. Even UK yields are moving right now, and that's you know, it's important because we haven't really seen that since the budget. Then there's the German 10-year. Here's Italy. This is even India. You can see that. And then obviously our 10-year is getting close to that inverted head and shoulder pattern breakout, as you brought up the chart a little bit earlier. So
sacrilege. Doing technical analysis.
I know
on
we
yields.
don't like to do technical analysis on yields. I typically don't, but since we're in a pretty tight range, and you look at the 10-year, the actual ZNs, this is where I prefer to do my analysis. We're breaking this rising channel, which that to me is a big deal. This is a big deal, big breakdown. We break through this support, and it's going to get downright nasty in the 10-year, and you can even see the 30 years. You know, this has got this is your TLT chart, Dale, that you you know, have brought up. This is basically the 30-year, so you can see we're breaking down in this head and shoulder pattern. Looks ugly, you know, for fixed income. So, you know, it's interesting that when you see all these big moves, Ryan, I'm surprised that the markets haven't responded to this, you know, this move higher in yields globally. Why do you think that is?
I think it's because there is a bit of difference when you look along the curve. Obviously, we've got what's happening in the short term. Longer term, markets are still expecting rates to be higher, which I think is valid because we're out. Well, touch wood, we're out of the low inflation mindset and system that we were in all those through the 2018 to 2020, 21, that sort of thing. So rates should be tracking between sort of 2% and 4% probably for the foreseeable future, next 5 years or whatever, barring any shocks that come along. So yeah, I think you're seeing that move along the curve more so than anything. Sorry, I've got to go grab my door now.
Okay, yeah, no problem. So Dale, what are you as he's grabbing his door? Yeah, that's all he's grabbing. What are you thinking this week with the Fed?
You know, I was just going to ask Brian, when all these countries that are watching their duration go up, who's going to be the first to implement yield curve control like the Japanese had for decades?
Well, let's ask Steve, since Steve is here. Maybe Steve's got a
Oh,
good answer for
Steve,
that.
who's going to
Good
be,
morning, Steve.
are we going to have yield curve control in the US here? Or do we have it already?
No, we don't have it already, but inevitably they will have to control it one way or another.
How did they do it?
To begin with, quantitative easing.
Okay. And
That's the first step.
okay. So how'd they get the back end to, not rise while they're doing QE?
Twist.
Okay, and what's a twist? I only know the dance. So,
That's what I meant.
all right, chubby checker, do the twist. No, but
Yes,
how is a twist executed?
they sell short-term
Nearby? Yeah,
maturity to buy long-term maturity bonds. Yes,
okay. All right.
because as you correctly pointed out, they cannot control the long-term curve by simple quantitative easing, I mean.
Yeah, and in fact, a lot of people are saying that's why the bonds are breaking down. He
Yes,
hasn't even
I've
said it
I've
himself.
warned about it in advance.
Yeah,
I've explained a long time ago why this is not going to work. What they're doing is not going to work to tame yields, because long-term yields pay attention and care about other stuff, more important stuff.
okay. All right. You have any other views that are compelling to you going into this new trading week that you want to share? Dollar wise or metals
Gold
wise? Go ahead.
metals, I think, are waiting for an opportunity to resume higher, or at least that's how it looks like.
Yeah.
Um, and I think there are big dangers ahead for the USD.
Hey, Steve, did you see palladium? Man, this chart looks dangerously bullish right
Yeah,
here.
all metals look bullish. Some a little bit more, some a little bit less, but all of them
Yeah.
look bullish.
Yeah, I mean, you start looking at, like whether you're talking about platinum or palladium, I was talking to a buddy of mine over the weekend about, gold and silver, not necessarily played out, but I think you're going to see a lot of catch up with some of these other metals too. So,
Yeah,
um,
I agree
yeah,
100%.
Yeah.
yeah, it's
Copper is acting pretty good too.
copper's looking great. Yep, I agree with that. Copper's actually, right back up into like a resistance zone. So some really strong moves in these precious metals. But how do you feel overall about the dollar, Steve?
I think it's very vulnerable.
Yeah. We got this big double top, but more importantly, I'm not so concerned about the double top that's playing. I mean, yeah, the dollar might weaken a little bit, into year end, but man, we are going to be really just kind of sitting on this big long term trend
Major,
line.
major trend line. Yeah.
Yeah, and man, if that breaks, I know
Then
it's
that's it.
we've been down there before. Yeah, I mean, if that breaks, it's like I've actually had people that have texted me this last week, like people that aren't in the markets
They're
or aren't
worried
in the
about the
markets.
dollar.
Yeah, they're like, hey, look, I'm hearing a lot of stuff about the dollar. Have you been, what are you seeing? I'm like, in fiat, it's all relative, the dollar
Yeah.
against other currencies, but I mean, they're more discussing the debasement trade. So, but I'm getting so many,
Maybe that's a
so
shoeshine boy indicator that we should be looking to buy this break to 98 in the Dixie.
I
Like,
think, that's the thing that I think about, and it's not necessarily like today. It's not a today
right.
trade, but maybe if we do get some sort of flush out in the dollar here at the beginning of the year, maybe that is something that we need to think more about, right?
Yeah.
Because because like I said, I'm getting. I mean, obviously, people know what I do, and people in my circle have known what I've done for a long time as far as the markets go. But it is at a, it's at a, I don't want to say it's at a fever pitch, but there are a lot of people out there. Did you find Mr. Peter Bookvar around?
Yeah, he's in here, and I'm promoting him right now.
Aha.
There
Let's
you
see.
go.
I'll ask him to promote. Oh, he is. He's come on over. Well, before we let you take over, let me just say, hey guys, it is going to be a busy week this week. I know today is a little slow going to kick off the week, but don't worry, it's going to get really busy. We got the RBA tonight. We have a rate decision from them. They are not expected to make a make a move on rates, but how hawkish they are is going to be interesting to watch. And then we have ADP weekly ADP numbers tomorrow. We have Jolt's numbers tomorrow. Hey, Ryan, monetary policy report hearings from the BOJ tomorrow, or a Bank of England
RBA.
tomorrow.
It's the RBA
Yeah.
meeting tomorrow.
No, but no. Don't we have monetary policy report hearings from the Bank of England tomorrow morning at some point? It's midday actually for you.
Yeah, maybe. I know we got a few speakers this week. BAJ, we got some today. Bailey's speaking on Wednesday. So there's going to be a few speaking, but got the RBA and obviously the Bank of Canada this week as well.
All right. Well, we have a lot of central bank activity this week, guys. So it's going to be really busy. This is the best place to be for it. But don't go anywhere. Make sure you stick around with Dale and his interview, Peter Bookvar, which is always a great guest to have here on F.A.C.E. Thanks, Steve. Thank you, Ryan, and thank you, Coach.
All right. Thank you, Dream Team. Thanks, Ryan.
Thank you, guys.
Thank you, Steve. Thanks, Blake. Welcome back, Peter Bookvar. How are you, buddy?
Thanks for having me again.
It's good to have you at this juncture. Why don't we start with what's being debated here in F.A.C.E? Are you looking for, a hawkish cut, or what do you think the connotations are going to be from Powell after the cut?
Well, Powell's got, after this week, he's got 3 meetings left. So
Right.
it almost doesn't matter what he says, because we know that after the following 3 meetings, there'll be somebody else. I mean, he's in a difficult situation because the Fed dot plot, which they'll update on Wednesday, their long-term real rate, what they call the neutral rate, even though that's just an econometric made up figure, is 1%. Well, PCE was 2.8, we saw in September, and obviously
Right.
it's a dated number, but when they cut interest rates this week, that's going to take the Fed funds rate to like 360 and change. So they're already below their long-term 1% real rate. So I think Powell is going to say, I'm done. Unless inflation takes a notable leg lower, or the unemployment rate takes another leg higher, he's done cutting interest rates, I believe. Now, again, the market may look past that because they know whoever replaces him is going to be looking to cut rates. But in a way, also, it does it really matter? I mean, what is going on in long-term interest rates, particularly today, is especially noteworthy. Look at the German 30-year bond
Right.
yield today. It is
Right.
breaking out to a new multi-year high. I think you have to go back to 2011, the last time you saw a German 30-year bond yield this high. And that is after the ECB has cut interest rates 200 basis points. Look at the
Right.
French O yield. Look at JGBs. Look at gilts. Look at the
Global.
US
It's global.
30-year here. That's at 480, well above where it was in September 2024 last year, and also where it was last summer, or summer 2024. So there is a notable shift in the makeup and complexion of the world's sovereign bond markets, and the long end of yield curves around the world are going their own way, irrespective of what central banks are going to do. And yes, the BOJ will raise interest rates next week, but the yields, long end yields have already heightened for them. And the 10-year yield
Right.
in Japan has almost doubled this year. Who cares
That's
what the
huge.
BOJ is going to do?
Right.
They've already made an assumption, or I should say, they've already made an assumption that, yeah, they'll eventually hike, but even if they don't, the long end of the yield curve is going to do it for them.
Okay. Um,
It's a sovereign bond bear market
yeah.
in
So,
duration.
when are these central banks going to do what Japan did for 2 decades and try yield curve control?
They're not going to do that until there's a pain point, and we're very
Okay.
far from any pain points.
Okay. So
And
can
if you're
we?
a Fed member, you know, or any central bank, you know that yield curve control all sounds great on paper, but it's a roach motel. The Reserve Bank of Australia experimented with it, and it blew up in their face a couple of years ago. So
Okay.
central banks will resort to yield curve control as the very last nuclear option.
Okay. Interesting. Because it did work for Japan for quite some time, didn't it? It was. Would you say it was successful? I mean, we didn't have any major crises
But
in
successful in
Japan.
what sense? It certainly didn't help to generate faster economic growth. I mean, that's the
No.
fallacy is when you have interest rates that are too low, it doesn't necessarily generate faster economic growth. So yeah, did it help them finance the profligate spending? Sure. But did
Yeah.
it actually help speed up economic growth or reverse the trends in population growth and so forth? No.
Yeah.
And
Right.
now that they've walked away from it, they've seen a doubling in their 10-year yield and they have inflation that is well above income growth and the overnight rate. So has it worked there? No, it hasn't. It's worked
Okay.
in lowering interest rates, but it hasn't really worked past that in terms of its, broader impact.
Yeah. Smoke and mirrors,
Yeah,
and being
it's
able to sell the paper.
artificially suppressing interest rates doesn't lead to faster economic growth. What it does lead to is the ability to more easily finance, government spending, which ends up being obviously, a fiscal dominant situation.
Do you have a long-term view on the 10-year?
Oh yeah, it'll retest at least the 5% that we saw a couple
Okay.
of summers ago.
Okay. Um, First quarter in 26.
Timing, I'm never good at that, Dale.
Okay. All right, but 5%.
But it's a bond bear market, and
Yeah,
and it will continue.
it breaks out of this range. It even measures higher. I've heard people talk, and not hyperbolic people talk about 7% on the 10-year, and they're not
Yeah, I
hyper.
mean, who knows? Let's get to five first, and
Yeah,
then we'll focus on six before we even think about seven. I mean, I'll be hyperbolic in my own way, and I was in my morning note this morning. It's something I've
I've
said
read it.
many times in the past. I mean, when we had $18 trillion of negative yielding bonds in
Yeah.
December 2020, that was the biggest financial bubble in the history of bubbles in terms of dollars. So we are now unwinding that epic bubble,
Right.
and it's not going to happen all at once. It's not going to happen in a year or two. It's going to play out over a multi-year time frame, and we're seeing it real time right in front of our eyes.
Who's stuck with that inventory, Peter? I've often thought about it. You never hear about, what has happened to all these negative yielding bonds, who owned them. Uh, they probably took a, 70, 80% hit in principal, haven't they? Or are they
Yeah,
worthless?
they're stuck on a lot of bank balance sheets,
Okay,
particularly, because a lot of that was in Europe.
right.
And we know European banks bought a lot of that stuff. So,
Okay.
but it's also in Vanguard here. They were buying that paper too.
Huh. And you never hear about the losses from owning that stuff at all. At all. I mean, I haven't. Have you heard a news story about people comparing? You're talking about the bond bubble and negative interest rate paper. That wasn't that long ago. What was it? 5 years?
December 2020 was the peak, but
Okay.
some
Yeah.
of the non-European funds or some US funds, they bought that stuff and they hedged out the currency, so they were able to mitigate and flip a negative yielding bond into a positive one on the
Yeah.
currency. But
Yeah.
a lot of domestic European ones, obviously, they weren't able to do that, and that's sitting on their balance sheets.
All right. I wanted to talk to you about, what's getting a lot of play out there. And there's some worry about when, if the yen peaks, that we could have some pressure on risk because of the carry trade. What's your take on that?
Well, after the carry trade blew up a few
That
years
was
ago,
right here.
um, I don't know what's left of it. I have no idea. I haven't seen anybody who has a real estimate. So honestly,
Yeah.
I don't know what's left of this trade. So it's really
Okay.
tough for me to answer.
Okay.
The yen is dramatically undervalued for sure, but it's been that way.
Yeah.
And the BOJ is being dragged kicking and screaming just to take their overnight rate from 50 basis points to 75, even though inflation's been running persistently above 3%. So to even just get them to do that doesn't want to make me buy the yen. But on the other hand, I know how undervalued it is, and I so badly want to buy the yen.
Okay. So do you think that I don't think Besant is real happy about the yens up here. Could there be some coordinated intervention with a rate hike? Because because people are saying if we get through 160, it could really blow again to the upside. I'm kind of thinking this is the Alamo for Japan. I've even heard people say the carry trade will be a margin call on Japan. So, do you think the U.S. is ready to step in and help the BOJ bring?
Um, no,
Because
people don't react. They react during a crisis. They react during, an
okay,
extremity. And I think that Besant doesn't want to go there just yet. He'll,
okay,
if you're in his seat, he probably wants to see how the yen reacts after the rate increase and see how things go there. But, you react when you really have to react. His hedge fund days, while he's still, while the administration is still is pretending to be a hedge fund, with what they did with Argentina and certainly a private equity firm with what they're doing with a lot of different businesses. I just
yeah,
don't think that's someplace you want to go to unless you have to.
okay. So I heard really didn't. His performance wasn't that great
Yeah, I
as
can't
a
speak to that,
trader.
so don't know.
Yeah, well, okay, I can. So you have any? People are talking about the oil gold ratio. You compare oil to almost anything, and it's pretty historically cheap. I was thinking we might rally to 64, but maybe we need to take out the lows first. Do you think this could be a 26 story? Energy being cheap and maybe starting to appreciate other against other things that it's been, historically cheap against, like gold or copper or, almost anything. Do you think oil has a shot for a nice rally in 26 with everyone
Well,
bearish?
talking my book,
Yeah, talk it.
I think that a barrel of oil at around $60 here is
Yeah.
probably one of the cheapest assets in the world.
Okay.
And certainly in real terms. And we do a bunch of work on it here and why we're long. And I see what's happening with U.S. shale production
Yeah.
rolling over in most basins outside of the Permian, and even the Permian in October saw a year-over-year decline in production. I see that the OPEC actual production of new barrels relative to quotas didn't match up with that quota increase. And here we are, the $60 is already absorbed north of probably now about 2.5 million barrels of quota increases we've weathered. I see the U.S. Back to shale, the U.S. oil rig count, which lifted a bit on Friday, but is near the lowest level since September 2021. And every day I wake up and somebody's bearish on oil and telling us
Yeah.
about all the excess supplies and so on, and oil still refuses to break below 60. I got the energy stocks as a percent of the S&P at less than 3%. Um, I think demand is still pretty good, and even China stockpiling oil to load up on in their strategic reserve. And back to OPEC, because production is not rising to the same extent as quotas, or tells me that there's not much spare capacity out there outside of maybe the UAE and Saudi. So I'm pretty bullish on oil prices here and natural gas as well, and we're long a bunch of stocks in the space.
Yeah, you and I talked natural gas last time you were here. I renamed it the widower maker, not the widow maker. because um, their husbands made a fortune being long. So it's not a widowmaker anymore. Their wives had heart attacks that their
Ah,
husbands made money being long nat gas. So
yeah,
uh,
finally. So
yeah.
that's also a
So,
help for
all right. So
one
I
of these
mean, I
stocks.
after hearing your narrative on WTI, I had to go in and buy 10 big. So that's something everyone should have on the radar. What kind of
I'm not good with the timing though,
I know we
Dale, but the fundamentals to me are falling into place.
all right. So and how are you doing it? What kind of there's so many different sectors within energy, producers, exploration, pipelines. How are you positioning yourself for this?
We're long all the above. We're long BP, Shell,
Okay.
Canadian Natural Resources, Oxy, Noble on the drilling, on the actual rig side. We're long
Okay.
EQT, we're long Williams, TC Energy on the pipeline side. So a variety of different sort of spots within the supply chain, both upstream, mostly upstream, but also pipeline, call it midstream too.
Okay, so will the S&Ps continue to ignore the bear market in long-term duration globally? Where stocks, kind of like in '87, yields kept going up and the market kept going up, and we had extreme disintermediation between the two?
I think you need to see the 10-year back above, 4.25, 4.5 for the stock market to care.
Okay,
I think the stock market right now is trying to sort of deal with what I believe is a changing landscape in the Gen AI trade. When you
okay,
think about technology, the history of it, when something is new and exciting, investors bid up every single stock that touches that space. But then you reach a point when, here we are 3 years into that, almost, and then you reach a point where investors start to say, okay, well, not everybody can win. And I think we are now at that point where it's sort of stage two, where not everybody can win. And I think you're now seeing this divergence within the AI tech trade, which is going to be a very big deal for next year. OpenAI has reached its tentacles throughout the entire infrastructure of this build out. And are they going to be able to win, or is it going to be Google, or is it going to be the Chinese? Uh, the fact that investors are asking these questions and are beginning to um, uh, speak with their money, that not everyone is going to win. That is a big change. And when you have such a highly concentrated S&P 500, if this sector starts to splinter, and if there's anything that goes wrong, like with OpenAI, for example, then this is going to be a much different market next year.
well, the NVIDIA recovery compared to the indexes is very muted, um, weak. I mean, certain semi indexes like the SOX actually has made new highs. While here's your small retracement in Nvidia, and here's the SOX. It's up here at new highs.
Yeah, well, you
So
got to, yeah, it's important to sort of slice and dice rather than looking at an ETF, because like you just pointed out, now the market's differentiating. Yes, the
right,
SMH has gone up, or the
yeah,
stocks, but Nvidia is beginning to falter because people are wondering, are they overexposed to OpenAI and Oracle, for example, rather than Broadcom, which is more tied to the success of Google's Gemini.
okay, yeah. Broadcom is coming in stronger today. Might have a new high, but there's divergences all over the place there too with Broadcom. Here it is. So it's called about 9 higher. So I don't know. This looks like it's topping to me too. Maybe it goes 410 or so, but so that's it. The AI trade is a vulnerability in the markets, and they don't care about rates until
Well,
we're at
no
four and a
matter
half.
if this data center build out, if this trade takes a breather, no amount of rate cuts are going to bail that one out. Just as Greenspan couldn't bail out the rollover the tech bubble.
Okay, where are they going to get the energy for these data centers?
I
Here
think
in
they're wondering the
California.
same thing.
Yeah, I mean, we have we have energy issues here without data centers here in California, where we have outages. So no one's really talking about where they're going to get the electricity to power these.
Yeah, that is they're in search. I mean, I've heard stories about some facilities that are dark or
Yeah,
awaiting power. So
yeah.
yeah, that's the chicken and egg thing
Okay.
that the whole sector is going to be dealing with for the next couple of years.
Another great year coming for gold, Peter.
I hope so, since we're long that as well, in addition to silver and platinum. Um, but I'm always humble about this business. So my belief and work tells me that it will be another good year, but I'm always watching my back.
You gotta. Dollar, Peter. A lot of people are saying this rally is over. This is a double top, and now we're headed for new lows. I kind of think that there might be one more of these from a higher low sometime this year. Um, a lot of people worried about the dollar. In fact, Blake was telling the story how he's getting phone calls from people that aren't in the business asking him about the dollar. So there must be a lot of press about, well, the debasement trade has been getting, all kinds of embraced. People are embracing that. But couldn't there be a pause in the debasement trade? Can you give me a narrative where the dollar is not going to break to new lows and we have another rally coming?
If
Yields?
If Kevin Warsh is the new Fed chair,
Yeah,
maybe that's a reason, which is a possibility, even though it's probably obviously going to be Hassett. But that could be a factor.
okay.
Anything's possible here, but assuming that the next Fed chair is going to be leaning towards cuts, then the dollar is sort of capped. I mean, you
Yeah,
have to flip it too. I mean, the euro is hanging in there, and European economy is no great shakes. Um, and growth doesn't necessarily lead to a faster currency. I mean, India's got one of the strongest economies in the world, and the rupee can't get out of its own way.
yeah,
So, currencies are tough. It's tough to figure out, and even with interest rate differentials, you never know here. But the dollar is obviously challenged here. Um, when you look at the U.S. stock market, a lot of foreign money has piled into the U.S. stock market in the last bunch of years, and that's helped the dollar. And the interesting thing this year is up until sort of April, May, call it more April with around Liberation Day, um, you had the Mag 7 trade get a second wind, and the dollar couldn't get out of its own way. Whereas in 2024, Mag 7s rallied, the dollar rallied, and vice versa, because it was a global trade. But now you have foreigners that still want to be in U.S. stocks, but they're hedging. The hedging that's gone on in owning U.S. assets from the perspective of a foreigner has increased dramatically this year. And I think that's a major factor why, while the dollar has rallied, it's still well below its
yeah.
highs.
Okay. Let me ask you this, Peter. What is this a wealth management arm of Bleakley? This
One
one
point
point?
BFG Wealth Partners was rebranded from
Okay.
Bleakley. BFG is actually Bleakley Financial Group. So we rebranded it, and this is the book report is just the stuff that I write daily on Substack.
Okay. Well, rebranding, I hope that the rebranding is a huge success for you guys. And, you and I have been talking for years, Peter. I enjoy, and I know everyone here enjoys the clarity that we get from you. And what's the one big thing that you're really paying attention to in 26, which is only a few weeks away?
If I'm right on oil,
Yeah.
commodity inflation is going to be a story. I mean, you look the CRB index, or I should say the
Okay.
CRB raw industrials index to sort of isolate that one area of commodity prices. That broke out last week to a multi-year high. And if I'm right that oil prices start to get some legs next year, commodity inflation is going to be back, and that will then complicate the situation with central bank policy and
Yes.
will likely also lead to higher long-term interest rates. Yeah, so the CRB Raw Industrials Index last week is at its highest level since January 2023. So we are approaching a three-year high in industrial metals prices.
Okay. So live 2026 like we're in the 70s. And when,
Yes. And when
okay,
it comes to inflation, expect inflation volatility and not this magic landing strip down to 1 to 2% that stays at 1 to 2%.
generational shift in yields
I believe
that we're
so.
going through. Okay, well, Peter, thank you so much.
Thanks, Dale.
Have a great holiday season, and we'll talk next year. Respect your work, and thank you for coming here and being open and sharing your ideas.
All right. Thanks for having me and you as well.
All right, so that's a wrap. Follow Peter on X at pbookfar. Sign up for his Substack. I read it. Here's a guy, especially when he gets, like he said, has a lot of conviction about something like global yields. Um, anyway, you could join the team in about 20 minutes on the morning edge. Remember, don't just count your oil barrels, count your blessings, and see everyone tomorrow for Turnaround Tuesday. So, adios, everyone. Take it easy. You're welcome, everyone. It's always a good interview with Peter Bookvar. See you guys tomorrow. You're very welcome. Adios.